Hey everyone, what's going on? It's Jason here. Today we're going over AMC, how the founder of Citadel is coming out talking about inflation, possibly trying to down stocks again to make money on shorts. If you could, make sure you guys smack the like button below. Not only does it help out this video, but it also helps out more people learn about AMC. Also, make sure you guys hit the sub button below if you're not a sub. Remember, at 10K subs, we're also doing a giveaway of some AMC stocks over on the public app. If you guys wonder what I'm using here, I'm using Webull. There's a link down in the description below. If you want to get 2 free stocks worth $1,800, also get these tier 2 NASDAQ views for 3 months. Sign up down below. Just do a quick overview real quick of AMC this week. As you guys know, we had a down, up, and then a down a week this week, fighting against the markets, fighting against hedge funds, and everything overall was not fun this week. The renewed fears of the pandemic over in Europe, again, with some nations shutting down over there, has definitely dampened a lot of the market. Also, the 10 and 5-year treasury yields are not helping out either. And now we have this cargo ship getting stuck over in the canals in Egypt. And that right there is going to do a great bit of bad to the market if we don't get this thing moved, hopefully today or tomorrow. If not, they're going to have to start unloading this ship, which could take up to 2 weeks. And that right there could hurt a lot of companies. Now, you might not think it hurts AMC directly, but it does hurt AMC directly because it would hurt the markets overall. And the market, down market overall, definitely hurts AMC. But we did end Friday at $10.24. But again, we did have a really crazy good update on Thursday. So the little bit of a down day, the 6% on Friday, it's not the worst news in the world. We did end at $10.31 in after hours. But I am hopeful that Monday we can see this thing start ripping up again. All the bullish signs are there. Everything's there in terms of us getting north. It's just right now, obviously, fighting hedges and the market is very hard for any stock to do. With a 84 million volume on a Friday alone, again, it's very hard to fight those kind of movements. It's very hard to fight the markets and the hedges with that kind of volume. Now, if our volume was, say, maybe double or close to triple that, we'd definitely be fighting them a little bit easier. But again, it's going to be hard when you're fighting both. Now, let's go over this article. Griffin, Citadel's founder, is coming out in warning of inflation. This guy obviously does this a lot. He does like to spread a little bit of fear in the market. And these guys do like to short and make money off shorting. So obviously it does them some good to put a little fear in the market here and there sometimes. Citadel's Griffin warns of inflation risk to markets enjoying retail trading boom. The retail stock trading frenzy will reach a new crescendo in the coming weeks thanks to the U.S. government stimulus check, but the inflation this support could ignite represents a threat to the stock market bull run, according to Citadel's Ken Griffin. The founder of one of the world's biggest hedge funds thinks that the $1,400 sent to millions of Americans this month is likely to fuel another spasm of retail trading before activity settles down to a still elevated level. Amateur trading would remain a powerful feature in U.S. equities, he said. However, in a rare interview with the Financial Times, Griffin warned that the huge amount of central bank bond buying and government spending could jolt U.S. inflation out of its decades-long torpor and unsettle financial markets just as they were attracting more retail involvement. Given the incredible amount of stimulus that has been unleashed, there is a possibility we see a real surge in inflation, Griffin said. Now, remember, we've heard many times the Feds come out and said, hey, look, we're not going to have that big of inflation. I've ran a lot of stuff and looked at a lot of stuff. I don't think the inflation numbers are going to be that bad either. Again, I think year over year right now, yeah, it's going to look a little bad year over year. I think month over month we're fine. Obviously, last March, last April, last May, and some of June, we were all shut down. A lot of these states were shut down. Obviously, year over year is going to look kind of bad. So this guy's doing nobody good in saying this because I think everybody knows this. But he's saying there's going to be long-term inflation in the market, and that's going to hurt markets. And again, that spreads fear in the market, right? And that makes people, start selling. And that, again, and lets them put puts and short companies out to make lots of money. Given the incredible amount of stimulus that has been unleashed, there is a possibility with real surge of inflation, Griffin said. The question is whether it's transitory or becomes permanent and structural. And there is a much higher chance it becomes entrenched than any other time over the past 12 years. On the whole, Griffin says he is optimistic on the outlook and hailed the retail trading boom as a way for more Americans to benefit from the U.S. stock market. But he warned of a doomsday scenario in which accelerating inflation deepens a bond sell-off, sends stocks tumbling, and stokes unrest among retail investors hurt in the process. It obviously shows right here U.S. inflation expectations. And again, this article, the people who wrote this article obviously put in the U.S. inflation expectations have jumped sharply in 2021. Again, we already kind of knew that. Obviously, last year kind of shut down. This year kind of not. You know, short-term inflation is going to be up. I mean, I don't think anybody can argue that. But again, it's only supposed to go about 2.5 to maybe 3.0%, where we should be normally around like they want to be around a 2% inflation number. So I don't think it's going to be that crazy, but again, you know, from the numbers I've read myself, I don't think it's going to be a long-term inflation. Again, I think it's just going to be year over year for a little bit. Month over month's going to look fine. Fears over inflation are growing across the investment industry, with accelerating price gains and bond market tantrum highlighted as the biggest risk that markets now face in Bank of America's latest monthly survey. Investors, the percentage of investors expecting faster inflation over the coming year in March hit the highest since 1995 when the survey began. But again, year over year is definitely going to look bad for the next couple months. I mean, what are you going to do? The market will shut down. Citadel is one of the hedge fund industry largest players, managing about $34 billion. Its flagship fund returned 24.4% last year, despite the turbulent market. And this year is up about 5.2% to the end of February. According to people familiar with the matter, over the fund's 30 years, it has averaged annual gains of 19%, burnishing Griffin as one of the hedge funds industry's biggest and most consistent performers. Retail trading now accounts for almost as much volume as mutual funds and hedge funds combined. So obviously, again, we do know this. We've had a ton of retail investors come in. There's been lots and lots and lots of interest, obviously, since the GameStop and AMC sagas have started. There's been a lot more retail investors coming in. That's great. But my job is right now, man, to hopefully retain a lot of those people and not have a lot of those people kind of fall back into not investing. Again, some people lost money during this whole time because of the Citadels and because of everybody in the market shorting things, and then having these stocks stop selling and trading on some services. You're going to lose retail investors too, and they're going to think it's unfair. But again, I've always knew this is unfair, right? I've been in the market for over 8 years now. It's been unfair the whole time I've been here. Obviously, these hedge funds and people like that, obviously in the suits, they've always ruled the market. However, Citadel recently found itself embroiled in a controversy surrounding GameStop, the video games retailer whose stock was whipsawed by hedge funds betting against it, and a horde of bullish retail traders loosely organized on the wallstreetbets forum on social media site Reddit. The fund stepped in to bail out Melvin Capital, one of the biggest hedge funds betting against GameStop, when Robinhood, a brokerage popular with the new generation of retailers, was subsequently forced for regulatory reasons to curtail trading in GameStop. Many Reddit users seized on a conspiracy theory that it was Citadel's behest. Citadel Securities, a separate high-speed market maker also owned by Griffin, is one of Robinhood's biggest revenue sources, paying it for the right to execute the trades of its customers. Nothing bad there. Nothing can definitely be going on there, man, right? Citadel did nothing there. It would never. The firestorm led to Griffin testifying at a House of Representatives Financial Service Committee hearing on GameStop saga last month. Although Robinhood attracted the most ire, and Griffin testified that Citadel had nothing to do with Robinhood's decision, he did not escape unscathed from some representatives. Griffin largely shrugs off the controversy as a social media concocted tempest stirred up by populist politicians. But he also argues that the saga foreshadows a wider, thornier problem of what happens when retail traders and passive index funds start to dominate more of the stock market, with prices becoming more detached from reality. Now, obviously, I think we can all agree here that, obviously he's a big hedge fund. He makes lots of money. He doesn't want to lose his job. He's obviously going to talk down. He doesn't want retailers to rise up. He doesn't want retailers to find out that, hey, we can actually also have a large part in the market. He doesn't want that. He wants the suits to be able to rule the market like they have done for years and 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 years. This right here, obviously, is another chart about inflation. Again, you could go over this chart yourself. It's again, I think it's a lot of fear mongering. Really, is the U.S. equities passive funds are now roughly as large as the actively managed investment universe after a decade of rampant growth. while retail investors now account for nearly as much as all mutual and hedge fund trading combined. Griffin highlighted how a oblique tweet from McDonald's ice cream cone and a frog emoji from Brian Cohen, a big GameStop shareholder, appears to be the sparking of a doubling of the stock price in one afternoon in February. The fact that a tweet from an ice cream cone can move markets will be the subject of academic studies for years, Griffin said. It represents a dynamic where certain stocks are now almost exclusively owned by retail passive funds. You've taken out the active investors who focus on traditional metrics and valuing in equity. Now, I think we can all agree again, though, that obviously Citadel does not want retail investors to have any part of the market, really, or at least a small slice of the market. They want hedge funds. They want the suits to rule the market as they have since the beginning of the market. There's nothing new here. Again, this guy has always came out and spread fear. And again, they do short a lot of stocks, right? They just bailed out Melvin Capital, who's the biggest shorter of GameStop stock. So there's no shock here that Citadel is coming out with these kind of articles. This isn't the first one. We've seen plenty of articles, not only on inflation, but other things in the market due to retail investors trying to stoke fear and trying to get people to sell off their stocks. And I'm sure it has worked for some. Now, a little bit of a good news, actually. There's some decent news here and there. This article by Money Morning says this stock is a real deal trading at a real discount. Again, AMC keeps showing up on the screens as a must-buy. As one of the most popular of the recovery and reopening stocks, AMC has had a wild ride over the last few weeks. Now, obviously, there's a chart here again. We just went over that chart at the start of the stream. That said, the stock is giving investors another opportunity to buy the dip on its way to my current target price of $20. Well, at least somebody's giving it a decent market price. That would represent a gain of more than 82% from today's levels. But in all candor, I think $20 is probably on the conservative side. Just a month ago, shares were available for a bit over $5 as the technical tide had started to turn bullish on AMC, which is still very bullish. The stock's 50-day moving average had just shifted into a bullish trend. But for too many investors, the question of when AMC would start hosting moviegoers was just too vague to buy the trend. Of course, we have our answer now. Obviously, they're pretty much all opened up now. With theaters reopening around the world, the stock ran up to $15 just last week. While the rally is strong, recent headlines pulled AMC shares back to their 50-day moving average for a quick touch and go technical test and another opportunity to buy the dip on the strong, relatively volatile bullish trend. And we've went over this a lot in the channel as well. You know, obviously the 50-day average is right now, we're literally just touched the 50-day average again. And the last time we did that, we bounced off of it pretty big. And I think that's going to happen again this time. I do think this coming up week, we should see some good movement in the markets, hopefully, as long as the markets aren't down because of the stupid shit over in the canal. I do expect AMC to do very well this week. If you guys have it, make sure you guys smack that like button below. Make sure you guys hit that sub button. Also, there's a link down in the description for Discord. If you guys want to be a part of the community, make sure you guys click on that Discord link. Come over here and join the Discord. Also, if you guys want to be up to speed with stocks and other things in the news, we do have a Patreon link down below. Also have some private streams as well. There's also some one-on-ones. If you guys want to be one-on-ones with me as well, there's a one-on-one section in there. Click on that Patreon link. Have a look around and join the Patreon as well. I'll see you guys in the next video. Peace.